Hello, my lovely friends. It's Sunday. And the questions this week are super interesting and they go to the heart of a couple of miracles of investing, but I'll also set some expectations as well. And let's jump into it. Today's story, if it pops, let's see if it pops. We'll be talking about what I always call time series investing, the importance of cycles and rotations. We'll get into the fallacy of chasing 100x gains, or can you do it? Look at some option strategies. Do some MicroStrategy modeling. A lot of people are saying, "How high can MicroStrategy go?" Look at Tesla versus Xiaomi, FSD, and most important thing is the miracle of compounding, eighth miracle of the world. We'll dig into that and how staking can impact that, and some of the crazy returns that can happen. And I made a video back in 2023 about the miracle of compounding and staking. And I was laughed out of the room. But who's laughing now? We shall see. And some advanced options hacks. And let's jump into it. Thank you all for coming. Thank you, Sean Donnelly, for being here. And I think maybe TND Tesla's in bed. Hopefully she is getting some rest. And K8 and everybody here. And Redrich and the whole gang. Let's go. And disclaimer, this is not financial advice, of course, as always. And all the questions come from Patreon. Big thank you to everybody in Patreon for making this possible. Let's get into the first question. Not waste any more time. And this one is a bit of a deep one, but it's also an inspiration for me. So I always talk about how my channel is like 7% female, but that's changing, really changing very fast. And this is from Ailey Bailey. Hi, James, one of the few women in here, all the way from Ireland. So grateful for what you do, changing lives all over the world. I hope so. That's why I get up every day. Anyway, my motivation in following you for the past 3 years is to be able to fund my 2 children through university, if that's what they choose to do. Single mom with no support from their dad. Well, he is I won't say. I won't say. But anyway, good thing you are smart enough to take care of yourself and your children. But once that is sorted, would love to retire soon too, based on the following. Based on following you, my portfolio is 45% Bitcoin, 30% Solana, 15% Tesla, 7% MicroStrategy, and 3% some other stuff. By the way, they're very good allocations. And now, due to recent reminders re dangers of self-custody, I'm thinking of selling some of my Bitcoin and buying more MicroStrategy or Tesla. And my time frame is child 1 for uni 2.5 years, child 2 6.5 years. So that would mean my first kid is maybe 15 years of age, approximately. Second kid is maybe 11. And I'm confident I should be okay in 6.5 years and hopefully retired by then. But what would your recommendation for the most return in 2.5 years be? So this is tricky. It's very difficult to estimate where things go in a short window of time. And again, once again, you're an inspiration. You, first of all, like a good mom, look after the kids first. And then second, you have aggressive plans for yourself. But the most important thing you can do first is control your burn, minimize costs, invest as much as you can. That's kind of the number one secret in life. The more you can save and the more you can invest early, the easier things are. But let's talk about time series and how I see things play out with your certain positions. And by the way, this is so important when it comes to investing, is always have a plan. I think always in 5 to 10 years. It's, even though some of my trades are every couple of weeks, I think very long term. And I try position myself for the big exponential gains, which we'll talk a lot about today as well. So first of all, Bitcoin, a little bit of concern for the 2.5 year time frame because we are over halfway through the bull, as I keep on saying. So you may want to think about reducing exposure slightly, and we'll talk about the time frame of that in a second. Also, Tesla, I do believe the spigot will be turned on in 2025 and 2026 and beyond with FSD. By the way, I drove yesterday for 8 hours in a car that drove me through some mountain passes at pretty high altitude, going around corners at 75 miles an hour, where if I wasn't so tired, I would have been terrified. This thing was on rails. It was just completely mind-blowing. And then, I have to say this too, during the night, it got dark all of a sudden in Yosemite, and a deer ran across the road in front of me. The car slammed on. It saw the deer. I wouldn't have seen the deer or been able to react. So you could say I'm here by virtue of FSD. Anyway, enough of that. Me shilling Tesla. But it's bloody amazing. If you have it, you'll know that for a fact. Anyway, the company innovations will be turned on. FSD will be adopted. That's pure margin. That's going to blow things up, as well as all the other good stuff they have going on that you know about. Also, Solana. This is an interesting one. I say maybe reduce exposure soon, but maybe let it ride. I mean, the black hole thing is playing out. Solana now does more volume than everything else combined. Everything else combined. It is completely insane. And in terms of that as well, about 52% of all crypto users from 30,000 blockchains are on one chain. It's crazy. But anyway, we'll talk more about Solana and staking as well and the power of that in a minute. And MicroStrategy, think about a Bitcoin pair trade as well, especially if you can trade tax-free. There's some nuances there as well. But first of all, before we get into the time series, self-custody considerations. Your concerns about self-custody, I believe, are valid. That's one of the reasons why I made the conscious decision not to stack Bitcoin in the bear, but instead to use option strategies to stack MicroStrategy. And boy, has that paid off big time. But it's also messed me up too, because my allocations are now completely bonkers. It is by far my largest position by virtue of everything that's happened. We'll talk more about MicroStrategy and where it could go as well next. But timeframe strategy. So you have the 2.5-year plan. I don't know how much university costs. Hopefully it's in Europe. I think a lot of universities are state supported, state funded to a large extent. But, just to be careful for your 2.5-year goal, maybe set aside a portion of your portfolio in low risk assets. Maybe even Tesla, because you don't want to be holding through the bear. And 2.5 years from now, we could be in a bear. But then again, it could be a great time to buy too, because we could be coming out of the bear. So I want you to think in terms of those timeframes as well. But also, if you do need some money, lock in gains. Remember, it's not what you make, it's what you keep. And then for the 6.5-year goal, this is interesting. Remember, the more time you have, the easier it is to predict stuff. The further you go out, 6.5 years is a long way away, and we'll be in the year 2030. And then things will be absolutely bonkers. Bitcoin will be 800,000. Tesla will be north of 2,000. And it'll just be crazy. So you can maintain a much more aggressive allocation in your high growth assets like Bitcoin, Solana, if it's still around. Who knows? Everything changes very fast these days. Tesla, etc. But you have to also regularly reassess and rebalance your portfolio and rotate as market conditions change. And I do want to say one thing here as well. Tesla is in your bag. It's on the list. It's in my bag too. I share my portfolios very transparently. If something happens in this U.S. election, things like Twitter could be shut down. Things like Tesla could be destroyed. SpaceX could be shut down. And that is the risk we take. So you'll be hearing more from me about the potential hedging strategies or double down strategies, depending on exactly what happens over the coming weeks. Again, not getting political, but it will have a big effect on markets, I do believe. And that's all coming in the next 14 days, 2 weeks. Okay, so watch this space carefully. And I talk about this because, it impacts our positions and bags. So, Ailey, remember, the rule is the more time you have, the easier it is to predict. So I put together a little AI graphic of get rich slowly, but don't risk blowing up your bags, okay? Some people kind of do that, which is dangerous. But again, you're doing really well. You're in really good assets. You've been in them for 3 years. Start taking some aside for what you need for your first child, and then let as much ride as you can for your second, because you have a long time to wait for that. And then you should definitely have enough for yourself too, to retire in Spain or somewhere nice and cost effective. But remember, control that burn. Hope that helps, Ailey Bailey. Thank you for the question. Next question is Freedom SA. First time Freedom SA is posted. Welcome to the community. So looking to grow with this community in more ways than just finances. Yes, it's very important to be well-rounded. What do you think is the next 100x horse? And is it this cycle or next cycle? And I'm concerned I missed the Bitcoin 100x, ETH 100x, Solana 100x. I have strong positions in Bitcoin, Sol, Tesla, MicroStrategy, but they will be life-changing. Will they be life-changing increases by 2027, 2028? And thank you and apologies if this has been asked already. No, there's a couple of things here that are very important. And the reason we looked at this question is because it is dangerous to be looking for the 100x's. Remember this one? Okay, get rich slowly. Don't expose yourself to blow up your bags chasing after those 100x's. Remember, it's a marathon, not a sprint. So let's talk about why that is the case. First of all, I do believe do not chase the 100x dream. It is very rare, very difficult to achieve a 100x return. And remember, like if you take crypto, you literally have to be in the top 1 over 30,000 of investments. You got to pick the right horse early to win and get that type of return. Most investments that promise such returns are speculative and carry an extremely high risk of you losing your bag. The other thing that's absolutely critical is market timing. It's all we're talking about today. Timing the market perfectly to achieve a 100x return is incredibly difficult, even for experienced investors. I spend a lot of time trying to nail bottoms and tops, huge part of my game, but it's not easy to do. I was able to do it for some things, the Clean Sparks, the MicroStrategies, the Solanas, the Teslas. But at the same time, the lower something goes, the harder you go in, and that's just how it works. Also, the other thing that's important to note, even if you're in an asset that experiences a 100x increase, sustaining such growth is highly unlikely. All right. So again, you look at assets like Nvidia. Okay, Nvidia's $3.4 trillion market cap. Tesla's about 700K. The question is, which one is more likely to 4x from here? And the answer is pretty clear. Could Nvidia be a $12 trillion company? Well, if that's the case, it would be half of the US GDP. I don't see that happening. So that's why it's important to do not be obsessed with this. I'll share this again. Reminder, get rich slowly. Don't risk blowing up your bag chasing the 100x. Now, 10x's you can do all day long. So we've done I've got a couple of 100x's and more, 190x's with MicroStrategy. But it's really, really hard, and you need perfect market conditions to nail this, and you need the courage, and you need to be ready as well to strike. We're going to be working on something for Get Ready Strike. It's a concept that I have. So once every year, things present themselves. Like we saw Meta at $90, we saw Tesla at $104, we saw Solana at $8, Clean Spark at $2 and change. These types of things, when they show their faces, you need to have been in a cash position, you need to have options authority, you need to have your accounts ready, and you need to have the confidence to be able to pull the trigger. So that's one of the things, again, it goes back to timing for these special, what are they called? Like unicorn moons or harvest moons that come once a year. I don't know what it is. But the point is, ready strike to be able for those. And that's what I wait for too. That's why I always sit on some cash to make sure I'm prepared. But I do want to say one other thing too. You can do 100x, but remember, in order to do that, you need to invest in crazy disruption, groundbreaking technologies, etc. And you need to get into them early. You also need to use sophisticated strategies, and you also need to be patient. Patience. It all goes back to time. Some stocks can give you 100x, but it can take 10, 20 years. Even stodgy stuff like Home Depots and Costco's and things like that, they can crush it for you, but you got to wait decades. So think about that too. Get rich slowly. If I have to show the turtle one more time, this is the reminder. And that's why the people that are watching this channel who are young, like under 30, under 40, you have such an advantage because you have that time. You can position yourself in this disruption and just wait. Wait 6 years, wait 10 years, and that'll be life-changing. And the other key important thing too, if you do make crazy good money on something, hold if you can. Let your winners ride up until the point where the market cap is simply so large they're going to run out of oxygen. And that also happens too. So watch this space carefully. There are things happening still in crypto that are completely mind-blowing. The scarcity of Bitcoin, the infinite money glitch of MicroStrategy, the crazy disruption for Tesla. These are all exciting places to be. But remember, timing is also important for rotation too. So I hope that helps. But again, be patient. Don't rush. And I think I have a thing called rule number 15. Let me get this right. Desperation means danger. The more desperate you get to achieve your 100x, the more danger you take on it, and you risk blowing up that little turtle bag. And you don't want that to happen. So thank you for the question. Freedom SA. Zatar 13 or Z-Star 13. I think it's Z-Star 13. Sorry. The recent Sol Strategies pivot leading to significant staking rewards per month confirms your retire on Sol thesis. It's amazing. Woohoo. Glad you think so. I have 700 Sol with 100% fully staked across 3 validators, averaging 7 to 8% yield with no fees. I've already received 40 Sol in the past 7 months and modeling out the CAGR of 10%. Very conservative. For the next 20 years, still produces an amazing return. However, in your retire on model, I've already hit the lower level required by 2032. The question is, what do you do with the Sol stake I'm receiving? And my first goal is to build up an additional non-stake portfolio of 30%. But after that, I'm considering either keeping them and compounding the returns or rotating them into other cryptos and equities. Note that I already have Bitcoin and Tesla bags too. Okay, so that's great news. Z-Star, first of all, it's important not to talk about, how much you have, but make sure your profile is very secret and you cannot be found. There's no correlation between Z-Star, which there isn't, by the way, because I looked to make sure you can't be found, but also keep your security locked down. So let's talk about something that people miss. And again, it goes back to time series, the ability to predict stuff over longer time frames, and the miracle of compounding. First of all, you're referring to my Retire On series, and people laugh. I made a video about 140% staking return in 2023. People thought I was insane, but here we are. Let me show you what can be done. And again, this is sandbagged too. So first of all, you're familiar with the power of compounding and staking. You earn interest on your interest. And when you stake your cryptocurrency, you're not only earning rewards on your initial investment, but also on your staking rewards. Okay, this is compounding on steroids. Also, when you've got the ability to buy this asset, it's like $8 or $10, and it goes to 160 where it is now, and it's going to 300. The returns are just face melting. And going back to Free SA, I think it was, that's where you get your 100x. Let me break it down as a reminder. This is the magic of investing. This is why you let your winners ride as well and be patient. Okay, so first of all, compound interest is the 8th wonder of the world. He who understands it earns it. He who doesn't pays it. Write that down, ladies and gentlemen. It is absolutely critical. Okay? Compound interest is an investor's best friend and the key to building wealth through the snowball going down a hill, which is this, the power of compounding. And again, visually, I talk about, getting in early, getting in hard, starting at the top of the hill and then rolling the ball down. I think, Brad Gerstner says the same thing. Get a small snowball and roll it down the hill. So important. But let's talk about the math behind the compounding, because in answer to your question, let it all ride while the thesis remains the same. And Solana, again, is doing everything in blockchain crypto today. Remember this slide. So if you invested, say, $100,000 in Solana at $10 and you stake for 10 years, you will get an additional ton of Solana back, okay? So you buy 10,000 Solana and you get, with staking that's compounded, another 9,600 back. So your bag becomes 19,600 Sol, all right? Now, the real breakdown of this is you invest in 10,000 Sol, costs you 100 grand, or you could invest in 1,000 Sol, costs you $10,000, whatever. Just move the decimal point. But compounding gives you 10,000 more SOL. It doubles your SOL bag over 10 years. Now, Van Eyck have a target of 3,200 for Solana in 2030, 2032. I'm imagining they're wrong, and we'll go out another 10 years to 2034. That means if Van Eyck are right and their prediction of Solana going to 3,200 is correct, that $100,000 becomes $63 million, because now you got 19,652. Solana times 3,200 is $63 million. That's an example as well for Freedom SA of how you can get crazy returns if you can hold and you can ride the train, and if the thesis is still the same. This is, and again, another infinite money glitch. And everybody, be ready. Be ready for the next opportunity. Okay, ready, strike. A lot of people are pissed off they missed MicroStrategy, and pissed off they missed Solana, and they're stuck in dead coins or dead assets. But next time, be ready, okay? Now, this is the math. Roll it in. Again, staking rewards are 8%. And by the way, that assumption is less. That only assumes 6.5%, not 8%. So if you go to 8%, you're probably at $100 million. It's completely crazy. So again, also, my conservative price targets are already exceeded. We're at $161 now. And the return on investment from staking is 32,000%. And this is the math behind all of that. You can pause it, break it all down, pick your scenario, pick your staking rewards, etc. I'll share this model later as well on Patreon. But conclusion, everybody, keep compounding the SOL. I keep compounding mine. We don't know how long this gravy train is going to last, so keep your tap dancing shoes on. Nothing lasts forever. Be ready to rotate. Imagine, I always talk about some kid in the basement using AI to spin up a new blockchain that's better, cheaper, faster than SOL and gets adopted. Then it's game over, okay? So remember, nothing lasts forever, or nothing goes up forever too, unless it truly is very rarely exponential. And remember, make the most of the miracle of compounding. Okay, time. Time is sometimes not your friend. It's the most precious asset. But if you have time investing, it makes it so much easier. Hope that helps. Just let it compound. And again, I share all I do. So the minute something changes in the thesis, you'll be the first to know. Next question is from Jay Pagan. Hello, James. Appreciate all you do. Seriously, wholeheartedly. I appreciate you too, buddy. My one quick question. Maybe please get a beer. No, sorry. Maybe, can I please get a bear? I thought you were asking me to go get myself a beer. Get a beer. I'm so tired. Get a beer. Bear IA, which is expected at bull market projection, since it has split and rocketed again. If not, maybe can you please get your projection for MicroStrategy for this bull run? Thank you. All love back at you. So you inspired me. A couple of things. One, I created this MicroStrategy ARB model. The very first iteration of it was created in the year 2020. Bonkers how long it's been, but what a gift it's been too. So now in the model, we can play with different Bitcoin price assumptions. We can have the outstanding share assumptions as well. And now we have a NAV premium assumption. Woohoo. Well, this is exciting. Where could we go? So I build these models so you can build out your own predictions and what you want to focus on. So this is the updated MicroStrategy ARB model. Again, shared on Patreon this morning. It's a bit of an eye chart. There's a lot in here. But I want you to focus on this. This is the new part. So within the model here, we have the theoretical MicroStrategy share price based on NAV premium ratios. Also based on number of outstanding shares you want to choose, and also based on where the Bitcoin price could go. So if you are a hyper bull and you believe Bitcoin's going to $500,000, and currently the NAV premium is 1.5. Imagine that goes to 2 because they get added to the S&P 500 or something. The price target for MicroStrategy now is 1867. I do want to remind everybody, back in 2023, my bull market target for MicroStrategy was $1,200. After the 10-fund stock split, that's $120. I sandbag everything to death. So remember that we're already way over $2,000, or after the split, $200. The current price is 215.86. Now, if you want to pick your assumption, I think we should conservatively land on around the $120,000 Bitcoin mark. We could go higher. We may only land at 100K. We could go to 150. I spent some time on Friday with a bunch of extreme Bitcoin bulls that were talking about some crazy numbers, 250, 450, etc., flying around the place. But again, just say conservatively 120K. NAV to premium is as it is. That means we could go as high as $373, which is kind of crazy. Yeah. And if we go to a 2.0, a crazy premium, remember we hit 1.81 or 1.82, which is 180% premium, very close to 2 just a week or two ago. That would take us to 448. And if we're being conservative, NAV premium of 1.0 take us to 298. You take your pick of your bear, expected, and bull scenario, tie it into your Bitcoin price prediction, and there you have it. So, hope that helps. This is always so fun to do. Anyway, thank you for the inspiration to modify the model and make it even better. And this is a money printer. The infinite money glitch. Love it. Anyway, Crazy Cat. Hi, James. My husband and I have a significant amount of our retirement account in MicroStrategy, but our adult son is very concerned that it is a type of Ponzi that eventually is going to go pop. Everyone says that this is genius, what Saylor is doing. But what is different than past Ponzi schemes or bubbles? Thanks for everything, Crazy Cat. So, yeah, let's get into it. And a lot of the time, like, it's funny. I feel like I spend a lot of my life. I used to spend a lot of my life fighting FUD. We'll talk more about another FUD piece in a minute. And then I just gave up. It's very difficult to change somebody's religion. And again, in full disclosure, MicroStrategy is by far my biggest position because it blew up way beyond my expectations. And here I am. So it's a good problem to have, but it's also there's a couple of things you need to bear in mind. And let's get into it. First of all, let's talk about educating your son. No offense to your son here. I'm sure he's a wonderful fellow. First of all, Ponzi schemes. MicroStrategy is transparent. Ponzi schemes are not transparent. MicroStrategy is a publicly traded company that discloses its Bitcoin holdings and strategy openly. Michael Saylor is incredibly transparent. One of the reasons I love him. And unlike Ponzi schemes, MicroStrategy has a legitimate software business as well behind the scenes. And yes, unlike Ponzi's, there is no promise of returns. He's not telling you the return you're going to get. The company doesn't promise any guaranteed return to investors, which is a key hallmark of all Ponzi schemes because they do promise a return. So first of all, it's not a Ponzi. Could you argue it's a bubble? You could argue here in this model that technically, if you didn't understand the infinite money glitch, it should trade at NAV, which means you take the amount of Bitcoin on the balance sheet, which is here, you multiply it by the price of Bitcoin. That should be the market cap plus the intrinsic value of the business, like $1.2 billion or something, and cash. And there you have it. That's one way of valuing it. But that's not how it works. Because remember, a company is valued on the earnings it makes. The accounting rules are changing in December. That's going to have a big impact on this too. So first of all, not a Ponzi. You could argue it's overvalued. I'm totally fine with that. And also the other thing, you mentioned it is your retirement account. We have literally over 1,000 MicroStrategy millionaires in the community. The people that followed me into that trade did very, very well. And but allocations do matter. It's very, very important. I can take on a lot more risk than other people. But if you find yourself very overweight MicroStrategy, like half of your retirement account, it's time to be very prudent with allocations and embrace rotation. Remember, it's not what you make, it's what you keep. And the other thing that's going to happen too is I do envision there's going to be a lot more MicroStrategies, right? This whole treasury strategy, the MicroStrategy playbook, is going to be replicated like mad. I envision, I said it yesterday, I'll say it again today, that the treasury business, buying Bitcoin, will be far bigger than retail investors are today because they got a lot more money. The retail investor doesn't. So I just see more and more companies stacking Bitcoin with whatever fiat they have, issuing bonds, issuing debt to stack more Bitcoin, because that's how you increase your share price. Again, back to here. It's how it works. So to make sure you're not too overexposed is basically the net thing, but it's not a Ponzi by no stretch. Is Bitcoin a bubble? It could be. But Bitcoin could go to $500,000 or $800,000 or $1 million by 2030. And you'll see exactly what I shared as well, where the MicroStrategy price would be. In fact, let's just giggle that out for a second. If if Bitcoin does go to $500,000, MicroStrategy at one times NAV premium will be $1,244. That'd be $12,400 in old pre-split terms. So again, it could keep on going, but it's a function of what Bitcoin does. And there will be extreme volatility along the way. So seatbelts on, please. Crazy Get, I hope that helps. And hi to your son. Next question is from Mr. B. Satoshi. You're a god. You've changed your life. No, I'm not a god. I'm just an average guy, everybody. Anybody can do this if they apply themselves. So I followed you into the November 1 call. I did it for the 205 strike. That was a mini hedge we put on against a portion of our portfolio, by the way, to hedge MicroStrategy, because at the time it was trading at a NAV premium of 1.81, which means it had 2.81x times the value of Bitcoin was the market cap, which, in my opinion, from arbing this for years, I've never seen it so high. Anyway, I put in a $5 order. I'm waiting to buy it to close. Any thoughts? I don't know if it'll go down. It'll take a big dip in Bitcoin for that to happen. And we'll see. We'll get to that in a second. But also, congratulations on your Sol Perp at 157. I'm still riding the Sol Perp because it's just so much fun. That's stealing candy from a baby. Anyhow, the options you face. There's three things that I'm thinking about. And again, my goals are not your goals. First of all, you can buy it back on a dip. We have 10 days left and not many trading days to go before it does expire. We can roll up or we can get called out. The rolling up will be buying it back and then selling immediately another one out of the money against your position. So I'm not sure. Like, one of my issues is I have a monstrous position in MicroStrategy and it is unprudent to have such a heavy concentration. So I'm fine with getting called out. You know, I thought about selling all of my MicroStrategy and putting it into Bitcoin and then wait for the NAV premium to come down, which may never happen. It could happen too. It's happened regularly since I've been doing this since 2020. We'll see. Or I could rotate into Tesla, or I could do half-half. Either way, I'm going to de-risk my portfolio a little bit, and that's what's important. Again, it's not what you make, it's what you keep. I don't know what your goals are. If you have only 5% allocation to MicroStrategy, I consider rolling up or buying the callback and taking the hit. Remember, we sold a bunch of time value. That's going to expire very rapidly and it will become intrinsic value. So watch for that dip. Next question is from Metafy. Thank you. You know what your team do. I'm up 600% in MicroStrategy. It's amazing, all the MicroStrategy questions. And my 11-year-old son has turned $12,000 into $60,000 with MicroStrategy in his junior ISA. That's a UK-based tax-free account. By the way, of all the people that made a ton of money on MicroStrategy, I guarantee you most of them are British, and I have no idea why that is. But the Brits in their ISAs have made a killing, and somehow, to the British people out there, they like the smell of MicroStrategy. So well done. And your 11-year-old boy, wow, that's another inspiration for everybody. So back to your question. Regarding Tesla, my friend who lives in Hong Kong visits China often and says Elon, Tesla's way behind Xiaomi in terms of robotaxis, cars, robo-helicopters, etc. He claims the cars themselves put Teslas into the shade by a country mile. I disagree with him, but I have no real knowledge of the China market. Do you have any insights to debunk my buddy, please? So again, it goes back to what I said earlier. I spend my life literally trying to fight FUD. Now I don't care. I just do what I do, share what I do, and share the data and let people make their own decisions. Let's talk. There's a meme for Tesla. It's like, the competition is coming. The competition is coming. Always coming. Look under every rock. There's a competitor. Yeah, there is, but there's only one. There's only one Tesla, okay? And people continue to fade it. You don't, but your friend in China does. So Tesla has been developing its FSD now for nearly 10 years. And they have a vast amount of real world data. They have more data on FSD than like 100x more data than Google have data, just to put things in perspective. And they've just built a monstrous supercomputer, the second one, to do even more. FSD is very real. It is unbelievably powerful. And again, you see the edge cases that I faced last night, like a deer running across the road. Lucky deer, by the way. I was in a Tesla. If I wasn't, that deer may not be with us, and neither may I. So two of us could be in heaven together. Anyway, let's talk about Xiaomi. They do have an SU7, and it does feature what's called advanced driving assistance systems. But there is no way in hell it has surpassed Tesla capabilities. Mercedes-Benz say the same thing. They say they got level 4, level 5 autonomy and all this type of crap. It's BS. It's BS. All right. And also companies that are new, they'll always stretch what they can actually do. And again, this is a data, it's an AI, and it's a scale game, and Tesla wins. That's it. Now, there will be competitors in the future, but the question is, who can do it at scale, effectively and efficiently, all across the planet at the same time? My money is on Tesla. Okay? Now, the other thing to consider too is public perception versus reality. There's global elections happening. This also fits very carefully into here. Fighting FUD, as I mentioned, is exhausting. I've given up trying to change people's minds. I can't do it anymore. But sometimes local pride and recent innovations can make new entrants seem more advanced. But again, nobody can touch Tesla's scale, and Elon Musk's visibility and vision might not be fully captured by many out there. And if you think for a second that Xiaomi can beat FSD from Tesla, all you have to do is look at this. How a Mechazilla, 2 chopsticks, carry a rocket the size of a skyscraper that weighs 250 tons. And when you see the size on the scale of this Mechazilla thing, it may look like 2 little chopsticks from a picture, but literally the one chopstick is the size of a skyscraper as well. It's monstrous. You can hardly see a human standing on top of it. Don't fade Elon. Nobody thought this would ever be possible. Again, he knows what he's doing, and he's very special. Let's go. Next question. Hi, James, from Soldoc, a Solana bag holder, perhaps. I'm so curious to know your thoughts on Tesla option strategies going forward. Premiums on volatile company like Tesla are expensive, but if the stock is going to $2,000 and beyond in the next 5 years, what would be your threshold to buy long call options for January 2027 versus continue to buy spot shares, and as you have been doing? So would you wait until closer to 2026 and buy out to 2028? I know it can't be guaranteed to pop by any specific time frame, etc., but what would you do? So first of all, and I work for the little guys out there. That's the whole mission. So let's talk about exactly what happened. Again, you've seen all my stuff, all my buys, all my synthetic longs and crazy stuff. I'm going to walk you through why it's cheaper now for me to stack spot than options. First of all, prudently, I have hundreds and hundreds and hundreds and hundreds of puts, okay, sold against Tesla. Huge amount of call options. If, heaven forbid, something happens to Tesla, I could blow my account up. So therefore, I can't take on any more exposure because I manage risk very carefully. Very important. Second of all, when you look at stock versus leaps, when Tesla was at 140 a few weeks ago, leap call premium was $40. In this scenario, buying the leap is a lot more leverage, especially with the price target in that same time frame going to say $400. So you can control 100 shares with $4,000 versus 14,000 buying spot. Now, that changes because the calculus and the prices actually change too. So now we have a higher price stocks, 220. The leap call option is about $100. And here, the leap premium is proportionately higher compared to the stock price. And this is why it's cheaper for me to buy. I can get more return buying the stock on margin. So you buy it at, say, 200, you put 50% down, you got $100 down. But you're not paying for time value like you are with the strike at 200 and you're putting $100 out in time value. You're way better off buying on margin than buying the leaps. That's why I buy the leaps. Now, taking it a little bit further, when do you buy out of the money leaps? When do you go nutso? And that is this scenario. I just want to remind everybody what we did way back when. This is the ATR model. And when I do buy out of the money leaps, of course, bought a ton of leaps up to about 160, 165, then it just became too expensive. But now, when we had the fall in late 2022, early 2023, we had the $104, $106 buying opportunity. That's when you go ape shit buying out of the money strikes. Okay. I bought a crap ton of 150s at this level because they were selling for peanuts. Okay. They were deep out of the money. But remember, I knew it was going back to $300, $400 in that time frame. So I was fine with it. I calculated my return on investment based on my price target, and that's what you do. It's not hard. Anybody can do this. So that's options, leaps, which ones to buy, when to buy them. Next question is from Solace. Hi, James and Mods. Much appreciated the deep dive. My question regarding debasement effect on Bitcoin's price. Question: what effect would Tesla's own in-house solar inverters effect have on the future growth of Enphase? A very good question. And there's a couple of more investment lessons here. Again, managing risk and return. I do have a position in Enphase, but it is tiny. It's probably like, I don't know, 100th the size of a MicroStrategy position. Very small. Allocations matter. I'm going to hammer that home because people are beginning to understand. They're not going to YOLO into some little tiny altcoin, but the majority of your bag needs to be on safe and secure, sure things stuff. And then with the smaller positions, you can take on more risk. Okay, remember that it's so important. So here, allocations matter. Black holes do exist. Keep the tap dancing shoes on. So yes, 100x's are possible if you got timeframes. The question is, what happened to Enphase? Let's get into it. First of all, Enphase was downgraded last week due to the Tesla Powerwall 3. Barron's an analyst, I can't remember, I think it was Christopher something. But they downgraded Enphase because they just had the aha moment that the Tesla Powerwall could impact Enphase inverter business. What does that mean? Well, before we get into what it means, this is Enphase and what happened on the chart. You can see that big red dip there, fell down to level 1. It's been range riding. Like you see, it's way down off the 360 high. And of course, high interest rates, weak economy, recession, which I believe definitely commercial real estate, automotive business, solar business has all been in a recession for the last year plus, beyond all shadow of a doubt. So when people say, oh, recession's coming, no, we've had it. We're coming out of the recession now in many industries. So that's the first thing. Second, the range rider here is very key. 80 was the last time I bought Enphase, so it's still doing okay. It was ranging up to 130 and down again. We're now at about 92. The question is it dead? Now, I believe, even though there are black holes, one company will take most, there's still going to be a lot of opportunity for smaller companies like Enphase to help people get free energy from the reactor in the sky, especially with crazy increases in electricity prices. Now, how does Tesla Powerwall 3 pose challenges to Enphase? First of all, Enphase microinverters are not compatible with Powerwall 3. Also, using Enphase inverters with the Powerwall 3 would result, if you could make it work, huge efficiency losses. And the Powerwall 3 has an integrated inverter for both solar panels and battery storage solutions. So you no longer need the inverter. And this has rattled the markets. I do believe, though, the markets are panicking a little bit too much. It might be a little bit oversold. Tesla, yes, it's a more integrated system. It's a better system. It probably is a better inverter. Everything they do is better. And it has very high power output and very high efficiency. But the world is too big for Tesla to sell everything. And I don't think they can. Enphase will still be very much required. As the rates come down, I'm confident that Enphase will return back up. Maybe not as much as before, but again, it's not dead. I did not sell. I'm holding. But remember, it's like less than a 50th or 100th of my MicroStrategy position, from what I recall. It's very small. I'm basically 90% in 4 assets, and 2 of them are Bitcoin or Bitcoin proxy. Think about that. Also, shout out to the Sea Shepherds. We are helping the Scorpion Reef from illegal fishing in the Gulf of Mexico. So big thank you, everybody, for your help there too. And we love helping nature as best we can. Tomorrow morning, 7:30. Well, actually 7:40, because we get on at 7:30 and then we make sure mics and everything are working. 7:40, we go live, DCA. And CTO Larson is moderating, and he has a spicy agenda. So again, it's what's important about the agenda tomorrow is there's no longer any time to take prisoners. The next 2 years are going to be critical for everybody out there. So watch the show. Hope you all like it. I'm going to do some live questions right now. Thank you all for coming, and thank you to the mods in the chat. And I hope I don't sound too tired. So first of all, I've got Copycat. Bitcoin is a keep forever type asset. Does it make sense for a portion of your portfolio to stay in MicroStrategy in your new forever bag? If so, what percentage? Of course, tap dancing shoes on, which would be just in case. Brilliant question. And we have studied this question for nearly 2.5 years to optimize what we now call the profit-taking model. I was meant to do a masterclass on that last week. Didn't have time. So busy. But hopefully this week I can do it. The key there is when you are in a winning asset, all right, you've got to take into account many factors like tax rates, cost basis, risk profile, expectations, etc. And then you plug that all in, and then you get your layers as to how much to take off the table. Now, remember, when you're in an asset like Bitcoin, you never sell at all. You might take 20% off the top, 30%, maybe as much as 60%, but you should always keep at least 30 to 40% of that asset. And again, it depends on many factors, and we have broken down the science for that, and I'll showcase that sometime, hopefully, this coming week. Piper, thank you up there in Canada. You're so kind. Thank you always. The best KPM. KPM is knowledge per minute. Mr. Shake, thank you for coming. Minimum solid price target in the coming 12 months. Yeah. Somewhere between 250 and 360. You heard it here. You can bookmark this video. That's where I see things going. And it could also go to 500, but that's a real stretch goal. What's happening right now, though, which is kind of phenomenal, is everything is moving to that chain. Everything. All the users, all the transactions, all the DEX volume. It's beyond black hole at this stage. As I mentioned before, all the volume, compared to all other chains, the majority is now happening on Solana. And in addition, 52% of all crypto users from 30,000 blockchains are on Solana. So we're on the right horse. So think 250 to 360, and I'll be perping it all the way up and hopefully start perping it all the way down too. Stay tuned. And Mr. Shake is back again. Which IA model is the easiest to use to double sol bag? That would be, if you have trading experience, I'd go PTOS, pair trading on steroids, because then you get the optimized trend model and you get the ability to trade up and down. That's what I'm actually using for my perp, that and IADSS. The other easiest and most powerful model is the ATR model, but it's not really designed for doubling your bag fast, whereas PTOS is. So check out PTOS, but you have to use PTOS, you have to have some trading experience, trading DNA, because it is a bit tricky. If you got a little more time on your hands, ATR will help you kind of swing that as well. And thank you for your super sticker, Andy, Nick M, Redrich, Justice for All, DBF430. I've got to look up. It sounds like a plane or a car or something. Spartayan, Bert Frank, Signal 103, The Great Escape, Dog 1, Forest M, Wolfman Racquetball, and Moto 89. Thank you all for coming. I'm exhausted, but I'll be back tomorrow morning early. Thank you as well to the mods and chats. Thank you, Sean Donnelly and Kerry and everybody else. And hold on a second. I just had breaking news. Somebody else said Sol is spiking. So is Bitcoin. A reminder, everybody. I'll turn off this slide for this. Sunday is pump day, but the pump happened early, which means it could continue into Sunday evening. Normally 2 p.m., which is 2:24 right now, is the time it pumps. But last week it didn't start pumping till like 5 or 8 p.m., I think it was. Bitcoin's up 350 on the day. Solana is up. Solana shot from 150 to 163 just in the past 24 hours. Big move. Black hole is happening. Thank you all for the good juju. What an exciting time to be alive. And we make it sound easy. It is easy. It's going to get a lot harder, though, with the advent of AI. So now is the time, everybody. Prepare yourselves, okay? And let your winners ride. Thanks all. Bye.